Okay, hi guys. I'm Bill Moore, the developer of the Trade to Win course. I'm here with Tom Basso, the author of the All-Weather Trader. Is that what it's called? The All-Weather Trader is a new book. He's got several books out, but that one is coming out. Please take a look at it. Tom and I were just having a discussion about what, it started off talking about edge and it kind of moved over a little bit into trading strategies. But I think he has some great insights for you guys. So I would love to have, Tom is known as a trend trader. Okay, I mean he's famous in that world, and that's obviously one of the things we do teach in the course. But having the insight from somebody with the depth of experience of Tom on that topic, and I think he has some great ideas for what strategies work together with some of the trend trading. So Tom, would you give us a little bit about some of the things like you and I were just discussing for our students?
What we were talking about was, I started out in life, as most traders do, trying to find that perfect buy-sell engine. And I spent a lot of time trying different ones and all sorts of different chart techniques. And, they all get you in someplace, they get you out someplace, they define where your stop loss is. All of this is good. But trying to make it perfect by adding tons of filters and making the math really complicated only serves to make that strategy less robust, not more robust. And as I started examining the problem, I realized if you had something, say, like just to coin an example, a very long-term trend following diversified futures trading program. So you're going to, let's say, trade 30 markets, and it's going to be your indicators are up in the 21, 30 days, 40 days, 50 days, very long term on the one side of things. And then you were to develop a second strategy that, say, was 1, 3, 5 day type of thing, then easily in your mind, and that's just simple long term, short term, no other fancy, no filter, nothing. You're going to find yourself many times long one and short the other. They're going to block each other out because on a short term, one's going to be pulling back, the other one's going to just stay in it and enjoy the ride for the long run. So you can understand in your mind then how that diversifies you, because as everything lines up, you're going to be fully loaded and clean and clocked. You're going to be making money. When they start getting iffy and they start pulling back and going sideways action, the short-term one's going to react quicker and go opposite to the long-term one, and you're going to you'll be reducing your exposure and your return to risk goes up. If you combine those two track records by themselves, they will have a certain amount of erratic nature to them. But when you put them together, because of the fact that they fight each other sometimes, you will be smoothing out the overall track record, which isn't that what we're all interested in, is trying to produce more predictability, more potential profit. And I think by doing that, you control your risks better. You can get a smoother return to risk ratio. If you really want a higher return, you can even now start pushing the limit on your risk exposure level, because you're protecting yourself by having multiple strategies sort of protecting yourself. And I think that's something that I think a lot of new traders, they're locked onto I've got to find the perfect strategy for me. And they're thinking in terms of one thing. I now trade 9 different strategies. I do it in about 40 minutes every afternoon. I'm working on some automation to get that down to 15 minutes once a day. And I run 9 strategies. It doesn't have to be that hard, especially if it's simple.
Interesting. Yeah. That's really fascinating. Do you remember it was a strategy, I think it was called something like one-sided pairs trading, or it was a phrase like that. It was used in a book that I thought was actually quite good at the time. Terrible things. I don't remember the name of the book, but the idea was, because I was looking at pairs trading, right? And pairs trading is trying to find something that looks like it can be coming down and combine it with looks like something's going to be going up. And you buy them and sell them in a certain ratio, so that as and it doesn't matter whether they're all going up, but as long as they're narrowing the gap, right, you're going to make money. But his idea was have that strategy ready, but generally the market's going somewhere, right? Let's say the market is going somewhere. It's either going up or it's down. For the sake of our discussion, it's going one way or the other. Well, why would you buy the one that's going to be losing money right now? Or why would you open that side of the position? only open the side, have the trade ready, but open the side of the one that's making money right now, and wait for the market conditions to change. And when they do, if it's muddy, like you were saying, you open the other side as a hedge now, right? But then if it completely reverses, you pick up the other side and get rid of this side, right? So you're combining the relative value analysis, right, that we use for pairs with the idea of following the one that's winning, right, and not trading the other side. I mean, I thought it was a very interesting
Or you
concept.
could just trade both of those things and whichever way they go and call it trend following.
It's right, and trade each one of them into, open them, but trade them independently based on how it goes, right? Yeah, no, I understand.
Trading need not be cerebral. It can be pretty simple. I've
right.
run into a lot of floor traders over my years that barely made it out of high school, if at all, but ended up in the pits in Chicago and made a lot of money. So, I mean, they just did some.
Yeah, I've met those guys, and some of them are brilliant, absolutely brilliant.
Some of them just, they come up with a simple concept, they repeat it every day they go to work, and they walk away with millions. So it's just,
I think that should be really encouraging for a lot of people who are learning to trade, because I think it's indicative that anybody can do it. You have to stay with it, right? You have to stay with it long enough to learn and practice it, and don't come in thinking you're going to make $1 zillion. Come in thinking you're learning. Exactly. We're going to try to make it fun, by the way, in our course. That's why we use games and things, because we would like people to be having fun while they're learning, but don't put in your head that you're going to be making money while you're learning. Okay, let's have fun, let's learn, and start trading with, bigger money, whatever you want to call it, later. Not now, but later. Because if you play the game long enough, you can win. And the way you can't win is if you're not playing the game, right? So let's keep them in the game. But that was great. I really appreciate that thought. It's stimulating to me as well. I've been doing this game a long time, but it's quite a stimulating.
Bill's head's starting to like.
Yeah, it does. My wife says she can hear it when I do that. I can hear it turning in there.
Yeah.
Hope it's not rust.
I cover all that in the all-weather trader as well. So I cover a lot of topics in there. There's a concept a friend of mine calls filling the pothole. He looks at his track record and looks at the worst drawdown that he suffered, and then he sits there and analyzes it and says, what kind of strategy could I invent that would make money during that period? And he actually does that, and then he blends it together with the other things, and the pothole is somewhat filled, so it's not quite as much of a drawdown. And he just keeps working at it, trying to create different strategies that are designed to capture different return streams. And I think it's an interesting concept. I never thought of that when I started out in life, but I've embraced it fully now, and I enjoy watching my portfolio. It's kind of like watching 9 kids, and you love them all, but they're also different, they're doing different things. This one's long, that one's short. This one doesn't even trade those markets. It's a lot of fun watching it all happen. Yeah. No, that's great. Really, really good. So wonderful stuff. Thank you so much for being here. Let me know if I can ever repay you in kind, help you with anything with your books and stuff. We're certainly going to be promoting your new book amongst our students, and like I said, I'll be first in line myself. So really, really good stuff. Thank you so much for helping out here, Tom. Yeah, you're welcome, Bill. It was a lot of fun.